don't think you fully touched on Zoom, but this is from George. Great call on Zoom. Do you think it's ahead of its skis now, or is the fundamental story just getting started? Thank you.
It's definitely not just getting started. And anytime you get involved with a stock that is not just getting started, you've got to have your wits about you. You've got to be sharp. And so that's definitely not a stock to snooze on in the slightest. And we're not. When we pivoted from bear to bull, and kind of bearish bias, and then kind of completed the work, the fundamentals on this and the qualitative thesis were all very, very bullish. But in order to get involved, we had to have data. So we created an invoice tracker, which I think many of you on Twitter have helped us with. So thank you very much. And if there's anyone who is a Zoom client today who wants to send us your invoices, please. We always love getting invoices, especially any from circa 2018, 2019, where we have not a ton of data. But if you want to send invoices, we're always happy to get them. Please black out any personal information. Send them to tech@hedgeye.com. So we created a tracker. And the tracker, we're updating it constantly, and it's able, we even updated it again yesterday, and it's able to show us daily bookings rate and daily monthly invoice rate. And as long as the peak of the summit is higher than where we're coming from, then I can sufficiently and easily say this is a long. And so, for example, just on a unit of invoice number, which is not going to correlate perfectly to dollars, but on a unit of invoice number, we're tracking this quarter's billings, invoices shipped this quarter is tracking more than double last quarter, which makes sense if you think about the fact that Zoom, that the whole crisis started halfway through Zoom's quarter. And the whole quarantine really did. And so basically we're going to get a full quarter of it this quarter, which will, so guidance for the back half of the year will get blown out of the water. And you'll also get incrementals on a profitability into the next quarter and to the back half of the year. And if I'm right, we'll be pointing towards $1 billion quarterly run rate for revenue next year. And this is a very, very efficient model with very high free cash flow. And so it really is a unicorn that is efficient to a degree that, and its market really is much larger than we would have thought in advance. Even look at legacy players like WebEx and GoToMeeting, who have torched their brands with customers many times and who have tied their own product in a knot many times over, even though recent efforts to untie those knots are improved and notably improved, and they're competing much better with Zoom. They still are going to lose share to Zoom over the next 2 years, in our view. In addition, Zoom will add the Zoom phone, which is a natural step in the road for Zoom customers to get rid of their PBX and to get rid of their monthly bills they pay to Comcast Business or RCN, et cetera, and to free themselves from that legacy architecture and to enable all the benefits of a cloud-based enterprise telephony and so on and so forth. So there's still a long road. The Zoom phone opportunity is almost as large as the Zoom video opportunity, and we are not even in inning one of that opportunity. So we need that opportunity to come now and to drive growth and by back half of next year. But I think that is on track and on pace.